Friends, in this video for ithought Advisor, I am going to talk to you on the topic time for slow cycling. There are times when we race to build our positions. We are in a hurry to buy stocks. We do our ideation at a pace which is scorching. Why? Because we feel we are in competition with others to get the right ideas before they lay their hands on them. We want to buy them early so that we don't pay a higher price later. This behavioral pattern worked very well in 21 and 22. In 23, I'm not sure it's going to work. The reason is simple. We are seeing the economy slowing over the past few quarters. The economy will probably slow further over a few quarters before it again shows signs of recovering to a higher growth trajectory. When the economy goes towards a slower growth trajectory, what happens is that the markets keep revisiting the valuation paradigms of industries, of sectors and of companies. When this revisiting of valuation happens, it is usually followed by a reset in valuations. That reset is usually downward. We are heading towards such a phase. Why do I say this? If you see the results of the December quarter, companies mostly met expectations. If you see results of some of the previous quarters, companies beat expectations. When companies beat expectations, then investors are generally in a hurry to build new ideas, to buy more in the same ideas and to not miss out. FOMO actually works when business tends to beat expectations. But in December quarter, results only met expectations. Now, for the March quarter, we are beginning to see results trail behind expectations. We are falling short of expectations in results of very large companies. I expect that the number of disappointments in the results will be higher than in several earlier quarters. What does this mean? It means that we are going to set ourselves up for further disappointment in the coming quarters unless we are going to drastically reduce our expectations. If analysts reduce expectations, that would mean that a valuation reset will be forced on the market by the analysts, because analysts cannot reduce their expectations and expect their valuations to remain the same. When we head towards an expectation reset, how should you behave? Should you have high FOMO or should you slow down? The answer is obvious, right? That's why I gave the title of slow cycling. The ones who cycle slower and who build their positions last may become the winners in several companies where disappointment is coming. I've been testing the waters with a lot of people, giving them opinions on companies where there is a huge following. I find that people are not even thinking of what will happen if there is one more quarter of disappointment. They assume that in the next quarter everything will be okay. This is what gives me a sense that you must slow down, because when that disappointment happens, people will be angry. We will see different types of reactions and the valuation reset will happen faster and bigger than even we anticipate. So the downside suddenly becomes bigger and riskier. That is why going slow helps. You build your position very slowly, then you would not face the magnitude of the downside, and when the downside happens, you may actually be able to buy and participate. So whether you are an investor or a manager, you need to slow down, you need to relax, you must know your stocks very well, you must know the valuations very closely, and you must have a very clear picture of what you will do when valuations change for the better or worse. You should plan ahead, and planning ahead, you should still be willing to move slowly to your plan. Now, this is something most people are not mentally ready for. That is why I believe that slowing down and cycling towards your goalpost much slower than others is the best way for you to achieve optimal results in your investment outcome. Your stocks may be good, but your cost must be controlled. Your positions may already be big, which means that you will have very little room to further scale up. You must know up to what level you can buy your position, and all this must be done in a very slow, rehearsed relaxed and gradual manner. We are at a time when slow cycling is going to beat fast track riding. That's something that most people are not ready for, but it's a time to prepare for that. Thank you for watching this video.